Gold. It's more than just shiny metal for jewelry. For thousands of years, people have used it as a safe place to store their money. When the stock market gets shaky or the value of a dollar feels uncertain, many investors turn to gold. Its price tells a story about how confident people are in the economy. A rising gold price often means people are worried, so they're buying a physical asset they trust. A falling price can sometimes signal that people are feeling more optimistic and are willing to put their money into other investments like stocks with potential for higher growth. It's like a global economic report card. That's why people watch daily price changes. Understanding where gold might go next doesn't require a PhD. You can get a pretty good idea with a few simple tools pro traders use every day. We're not getting bogged down in complicated theories or confusing charts. Instead, we'll look at 3 straightforward strategies anyone can understand. These methods help you read the market's story. Today is August 30th, 2025, and we're using yesterday's trading data, August 29th. First up, one of the most popular tools in any trader's toolbox, the moving average. It sounds technical, but the idea is incredibly simple. A moving average smooths out the day-to-day price spikes and dips. Imagine a river with a choppy surface. The moving average shows the steady current underneath. We often look at 2, short-term, 50-day moving average, and long-term, 200-day moving average. 50-day equals the average closing price over the last 50 days. 200-day equals the average over the last 200 days. Price above these averages equals an uptrend. Price below them equals a downtrend. When the 2 lines cross, if the 50-day crosses above the 200-day, that's a golden cross. Looking at August 29th, 2025 charts, gold closed at $2,350 per ounce. 50-day moving average equals $2,320. 200-day moving average equals $2,280. That means price is above both averages. That's a bullish signal. Trend is positive. No signs the upward momentum is slowing. Therefore, based solely on moving averages, forecast for September 1st, 2025, likely continue upward. Expect it to stay above $2,350 and possibly push toward $2,360 or higher. Our next strategy is all about finding the invisible floors and ceilings that the price of gold seems to bounce off of. These are called support and resistance levels. Support is a price level where a downtrend can be expected to pause due to a concentration of demand. Think of it as a floor that the price has trouble falling through. When the price gets near a support level, buyers tend to step in because they see it as a bargain, which pushes the price back up. On the flip side, resistance is the ceiling. It's a price level where a rally tends to stall out because there are a lot of sellers waiting to cash in. This selling pressure makes it difficult for the price to break through to new highs. Looking at the recent price action leading up to August 29, 2025, we can identify some key levels for gold. Over the past few months, we've seen the price find strong buying interest every time it has dropped near the $2,300 mark. That makes $2,300 a very strong support level, our floor. On the other hand, the price has tried and failed to break above $2,400 twice in the last quarter. This makes $2,400 a significant resistance level, our ceiling. Yesterday's close at $2,350 places the price right in the middle of this range. Since the price at $2,350 is neither very close to the support floor nor the resistance ceiling, this indicator suggests a period of consolidation or sideways movement. The price of gold will likely hover within its current channel, staying between $2,330 and $2,370 as it figures out its next major move. It's waiting for a catalyst to either test the floor or the ceiling again. Strategy 3. Is gold overbought or oversold? The Relative Strength Index, or RSI. This is a momentum indicator. It measures the speed and change of price movements. The RSI is displayed as an oscillator, a line that moves on a scale from 0 to 100. A reading above 70 generally indicates overbought. This means it has been bought up heavily, and the price might be getting a bit too high, suggesting a pullback could be coming soon. On the other hand, an RSI reading below 30 suggests oversold and a potential bounce. As of the market close on August 29, 2025, gold was at $2,350 per ounce. The 14-day RSI is sitting at a reading of 68. This number is getting close to that key 70 level, but it hasn't crossed it yet. It tells us there has been strong buying pressure recently, which aligns with moving averages showing the uptrend. But the momentum is getting a bit stretched. The market is feeling optimistic but might be running out of steam. It's like a runner who is leading the race but is starting to breathe heavily as they approach the finish line. Based on this RSI reading of 68, the forecast for September 1st, 2025 is cautiously bearish. While the price isn't officially overbought, it's very close. This suggests the upward momentum may pause or reverse slightly. We might see the price dip slightly from $2,350, perhaps testing the $2,340 level, as the market takes a breather after its recent run. Putting it all together for your September forecast. We have 3 different forecasts from 3 simple strategies, and they don't all say the same thing. This is perfectly normal in financial analysis. The key is not to get confused by mixed signals but to use them to build a more nuanced market picture. Each tool views the market from a different angle. Think of it like getting opinions from 3 different experts. First, moving averages. The long-term trend is clearly up. Gold is in a bullish phase and likely to keep rising. Second, support and resistance. Price is trading in the middle of a defined range between $2,300 and $2,400. So expect neutral sideways movement short-term. Finally, RSI at 68 is flashing a warning, close to overbought. Combine the 3, dominant long-term trend is positive, short-term momentum shows exhaustion, and price is stuck in a neutral zone. So a major crash is unlikely and an immediate powerful breakout is also improbable. Upward trend meets short-term headwind from buyer exhaustion. Therefore, our final combined forecast for September 1st, 2025 is one of cautious stability with a slight upward bias. The price of gold is unlikely to make a dramatic move in either direction. Instead, expect it to trade in a tight range, perhaps hovering around $2,350 or drifting slightly higher toward $2,355. The strong trend should prevent any significant drops, while the near overbought RSI reading will likely cap any major rallies for now. Using these simple tools together, you've moved beyond just guessing and have made a logical, data-driven forecast for the week ahead. If you found this helpful, like and subscribe for daily updates. Check the pinned chart for live notes. Good luck and trade responsibly.